Good evening, everyone, and thank you for joining us on Wango Spaces today. My name is Rina Namsa, and I'll be your host. Today, we are going to ask Arvocap anything about investment. And I'll be speaking to the co-founder and the CIO, that is the Chief Investment Officer of Arvocap Investment, Mr. Wilson Wariari. Arvocap was launched in June 2024 into the asset management space, and it has reported asset under management of about Kenya 8 billion. That is by end of 2025. And so we are going to unpack the performance behind its money market, fixed income, equity, global equity, even special funds. And then we also assess how much of the return came from the different market conditions versus the active management of this funds, and interrogate the key investor question. The things people are actually want to understand now is around fees, liquidity, lock-in periods, the risk control around these funds. Forex is offshore because now most of these funds we're seeing that going offshore as well. And the sustainability of return as the first psychology. We now let Mr. Wilson to introduce himself. And maybe Wilson, tell us, what is your role as CIO at Arvocap? We oversee portfolio construction, risk management, fund strategy, and the delivery of investor returns across different sub-funds. So talk to us about a little bit about all that as you introduce yourself.
Good evening, Rena. Good evening, the whole Mongo fraternity. Everyone who has joined this evening. Good evening, all. One, say thank you to Mongo for providing the opportunity to just come and speak more about Arvocap investments and even the investment strategies and how we create value to our investors. Probably before I speak about my role at Arvocap, it's good just to give a brief of who Arvocap is. As Arina has said, Arvocap Asset Managers is a fund management firm that is licensed and regulated by the Capital Markets Authority. We were registered in October 2023, got our unit trust license in May 2024, and launched our funds, or what we call our various solutions to our clients, in June 2024. So it's been 2 years, 1 month. And over that period, Arina has rightly said, grown our AUM currently, as of yesterday, 14.26 billion in assets under management. And doing this across different investment products. And we'll be speaking more about those investment products shortly. As Wilson, a background in markets, capital markets, both locally and offshore for the last 12 years plus. And over that period, worked from derivatives trading to private wealth management, portfolio management, and now to CIO at Arvocap. And basically, as a CIO, my role or my work involves the setting of the strategy, the investment strategy, and leading the various investment committees, investment councils, investment boards, and overall the strategy that underpins each of our funds, and working with the various teams we have internally, the portfolio managers and the market research analysts, and the other teams within the investment space, in the fund administration and all that, to ensure, one, that we are providing, I would say, optimal returns to our clients, that we are optimizing on our strategies, investment strategies, we are optimizing at the different market conditions, and doing so across these different funds. So that's, I would say, it's the role of the CIO, or what I do on a day-to-day basis, basically leading these different teams from your traders, your dealers, research analysts, and now the fund administration, fund accounting teams. And from there now also now the risk management teams. And all these, it's in order to ensure that we are optimizing, one, our returns to our clients, and then allocating. Capital allocation is a big thing within the investment teams. So this is done with the portfolio managers, and then under them being supported by the various research analysts in doing all the same. And so for me as a CIO, I'm basically leading all these teams and the various heads of different departments within the larger investment team. So that's my role as a CIO.
That sounds quite a lot, handling all the departments and all the things. It shall come with some of those, such as capital allocations that you've mentioned, the risk management. But just to get it down, as a CIO, what market gap did Arvocap actually set out to solve in positioning the firm against the larger ones that had already existed in the Kenya asset management industry? What is the gap that Arvocap saw in this space and decided to come and launch in 2024?
I would say as we explored the market, having the background I've given, that my last role before being a CIO was a private wealth manager. And so working with various investors, helping them allocate capital, both locally and offshore. And also how that context, having come from an international market perspective, would see the gaps that are there in terms of the investment product locally and what is available in the global markets. And so the biggest gap we saw was in terms of the investment products and the offering that was available to various investors in the country. And so we sought to fill this gap by creating different investment products. And how we went about in creating these investment products to fill this gap is we identified the various investor needs. And one thing we noted was in the market as it was then, there was this aspect of one fits all. So you've come as an investor, then we give you this product that we're telling you fits all your investment desires and all your investment goals. So that's not true for an investor. An investor will have cash or liquidity needs. So they want a product that gives them various cash outflows at given times. An investor wants to build a house in the next 5 years. So they want a product that is different, that is actually helping them to save and accumulate towards that goal they have. Another investor wants to invest in the stock market and to diversify, to grow. But then they are active working, they are active running their businesses, they are active running their funds, and they are not there to actually follow up. And then there was that gap in terms of investment advisory. It's a gap that was existing. And so we felt that now one way to fill this investment advisory gap is by taking or helping clients position themselves through the CIF framework and invest in this equities market or in this stock market, but having professionals who are actively managing their funds. And so with that, we brought in the equity funds. And then there was also this other aspect we saw whereby investors were trying to go buy into the every fund that was coming to the market. There's crypto, there's blockchain, there's electric vehicles, all these. And so a lot of investors were getting into, I would say, things that were almost at the tail edge of their investment cycle. And so most of them ended up being disillusioned because of the losses they were making, because they were coming into spaces whereby they had, there was a very good thing in EV. And by the time they're getting to that EV space, or even by the time they figure out how to get into it, it's already a fading theme. And so with that, we sought to introduce a thematic fund that helps clients, that have professionals who are looking for these themes and to helping clients to allocate capital within these themes. And so the clients don't have to open so many Forex accounts, so many these and these, and try to do things by themselves while burning out their fingers. And so with that, we brought a multi-asset strategy fund. So for us, I would say across all our funds, all across all our products, you come even to something like in the Sharia offering. But we thought that there was a huge gap in terms of there's actually, at that point, no product that was catering to the investment need and the sophisticated investment needs of the Sharia or ethical investors in the country. And so we sought to bridge this gap by giving them investor products that one will help them explore, even in terms of the market creation of some of these products through the Mabruk Fund. And then even in terms of the developed global markets in the Sharia space through a Sharia Global Equities Fund. And so for us, we sat down and did market research, would identify the client need. And so we'd go ahead and create a product that actually meets that client need. And that's how we came up with the 10 products that we have, which we divided across 4, I would say, broad segments. We have our fixed income funds for your money market, for cash management, to Eurofix, for USD or Eurobonds investing, Almasi, the accumulation fund, and GAO, the distribution fund. We'll go into details into most of these funds after. And then to the other category of equity funds, helping clients invest in the equities market through a local equities fund, an African equities fund, and a global equities fund. And then beyond that, get into the thematic approach or the thematic strategies through a multi-asset strategy fund. And the final category is the ethical investing through our Mabruk Sharia fund and our global equity Sharia fund. It was a lot of painstaking market research, identify the investor goals. As you have heard, and as you go and elaborate in each of these products, you'll find that as a grow, each fund has a certain goal in a client's portfolio. So for us, it's not one size fits all. It's what is your goal? What are you looking to achieve as an investor? Then based on your 1-2 goals, then which product do we help to match and align with those goals? And with that, we help you create that portfolio. So basically, that's how Arvocap was born, and that's the gap we saw and we sought to fill in the market. And I believe that's what has positioned us or just turned us to that 14.26 billion in assets under management that we currently have.
You mentioned you have 10 sub-funds. Just to mention a few, the money market, equity, Sharia, and you've explained investment philosophy behind Arvocaps. I don't know if many of us actually understand or are aware of some of these funds. I think many people know about money market funds, special fund, and how they work probably, but we'll go deep into try to tackle each one of them. But before we just tackle them, you reported assets under management roughly around 500 billion at the start of 2025. But by the end of 2025, you are at 8 billion. Looking at assets under management growth, what actually drove that rapid growth within that period of time, and how much of this actually came from retail versus institutional investors? Because there are some institutions which focus is mostly on institutional investors, which maybe they bring in more money, I don't know, versus retail, you let us know. So how much actually came from the retail versus institutional investors, and how the asset and the management currently split across the money market fund and just the 10 sub-funds that you have mentioned?
One, and also the biggest driver of the rapid growth and of those assets from 500 million to 8 billion by end of 2025, and currently to 14.26 billion as of May or as of June 2026. I say it's the client and that goal-based investment strategy that you employed, that at the beginning, as you said, 10 funds, clients are trying to understand what this fund means. But over a period, as we engaged in a lot of investor education, one thing we realized is that as clients came to understand each of our funds and how each of our funds is feeding into a certain goal they have, then we saw more allocation towards certain strategies. We saw more drive by investors. And our fund is largely retail investment. We are yet to embark strongly onto institutional investors. 88% of our AUM is basically retail investors. And so for us as a strategy, we felt that there was a need, and we took a bit of a cognitive and very elaborate strategy to first ensure that we reach out to the retail investor, because that's why it's the largest gap. In the institutional investment space, there is, I would say, a lot of strategies that they can employ, but we felt that the retail investor has actually been abandoned at that particular point in terms of provision of investment strategies. And so our whole strategy or our whole investment guide in terms of how we approach the market was one to educate the retail investor, help them identify these goal-based investment approach. And so we feel as we continuously engaged our investors and they understood it, then we saw rapid increase in our AUM. I would say that has been the largest contributor of that growth. Of course, we have seen the general growth in the CIS space, the collective investment space, over the last few years. So of course, now that general market dynamic of investors broadly appreciating the collective investment framework and seeing how it fits within their investment portfolios has also helped in that growth. And comes in terms of our assets and how our positioned our investors are, as I said, 88% retail, only 12% institutional. And across that, what you have seen is that, like, for example, speaking at currently the 14.26 billion in AUM that you have and how it's allocated, our fixed income funds have about 8 billion. So that's across all our fixed income funds. Our equities funds are about 4.2 billion. The multi-asset strategy funds are around 2.5 billion. So that tells you 2.8 billion. So that you could see how investors are basically allocated across the different strategies. And to a large extent, I would say the goal-based investment approach has been the biggest driver of our growth.
Listen, let's go a little bit into the numbers. Now, you said fixed income is actually 8 billion, equity funds 4.2, and the rest. Fixed income is the Almasi Fund, if I'm not wrong, and it's returned at 20.51 net in 2025. And since inception, that has been 42.49%. Arvocap in general delivered a net return of, including money, of 40.23, a multi-asset strategy at 36.86. Global equity gave us 28.72. Africa equity at 22.59. Almasi that I've mentioned 20.51. Then the Eurofix, you tell us what actually that is, because I also want to understand Europe what at 11.63%. How much of this performance came from the market beta? And you can explain in a layman's way how this came about. And actually, how much of this also came from active security selection, currency movement, and tactical allocation, and how repeatable are these returns in a less favorable market environment? If the market changes and becomes less favorable, and like we've seen before, how is it likely to be repeatable in terms of returns?
Great question. As you have rightly mentioned, across most of our funds, we deliver great returns. We did outperform some of our benchmarks in some of the funds. So it was great. Some we quite along what the benchmarks were. And to us, as we get into markets, the first thing that guides our investment decision making, I would say, helped propel the returns that you saw in the different funds. Of course, we do a lot of tactical plays within the funds themselves. These are now the various trading decisions, which are basically backed by, as I said, the core structure of our investment. You have a huge research team. And so they come up with various fundamentals of these different businesses that you're looking to invest in, or you're looking to get a part shareholding into, or the boards that you're looking to get into. Then they get into the technicals. You have a big tactical research team. So that also now look at now the different tactical plays in the various assets that you're investing into. And then there's from the portfolio allocation strategy itself and the portfolio managers, the different portfolio allocation plays that you make within our holdings. And that active management philosophy, it's what led to generation of these alpha returns as you have seen across the different funds. And when you look at in terms of the general performance, for example, the Zamani Equities Fund, which is basically invest in the local equities market or buy shares that are listed on the Nairobi Securities Exchange. And the return derived from NSE 25 over that period, which of course, in one way, there is now that aspect of the benchmark itself, there's that aspect of it's a market cap. And so there's the movement of various, a bit concentrated. But then when it comes to the tactical portfolio allocation strategy, now that's where now I would say our PMs drive into to ensure that now in as much as we have about, I would say, illiquidity. As you've heard, our funds are quite big, or some of our funds, especially the equity fund. And so in terms of when you're making some of these allocations to some of these stocks that are listed on the NSE, means that now certain allocations may be moving the markets too much. But what happens is that the tactical allocation strategies employed by our PMs in terms of how we're invested in this market to ensure one, we are optimizing on liquidity plays, we're optimizing on these different market tactical movements. And so that helped drive the performance of the money and even beyond what the market did or what the index itself did, even with those, the dislocation of some illiquidity among some of the biggest movers on NSE last year. And now I want to speak about the sustainability of these returns. So it's not about just tracking a certain benchmark. It's about the strategy that we employ within our fund itself to ensure that we can consistently deliver optimal returns. And I would say this one becomes even more clearer when you look at how even our performance is year to date. I know we post our performance across our website on each fund, and you can see month-on-month performance of each fund. And it's not just about what was driven by the index movement or the market movement, but it speaks more even on terms of the strategies that we employed in terms of risk management and also in terms of the tactical allocation to ensure you're optimizing on the returns in the marketplace itself. And that one goes back as you look at even our thematic approach in the multi-asset strategy fund and how we use that thematic approach to allocate across different themes, to allocate across different capital flows within the marketplace. So whether you are playing in the AI space itself, each part of AI are we investing in? If you read our CIO note of 2025, so this is a note we published in January 2025, we told our investors that our biggest, so by then everyone was just picking what NVIDIA, and we told our investors we are looking beyond what NVIDIA was doing at that particular point in time. And we felt that for us, AI, the biggest play is in infrastructure. And so how did we play the infrastructure play at that particular point in time? One area we identified as early as February 2025 was memory space, because everyone is building all these data centers and everything. But what are data centers? It's basically one big room of memory chips, because this storage unit, and the biggest thing here is, so what is where are you storing all this data and everything? So memory and all that. And so we could see the bottlenecks that were developing along that. So we were earlier allocators of anything the memory space itself. We bought Micron at its 60s during that period. And now it's sitting about $1,200 or $1,100 a stock right now. We went beyond that to the other aspect of that with this whole compute demand, then the infrastructure itself, the data centers themselves, the bottleneck. We're not building enough data centers at that particular point in time. So we bought your Nebia and such stocks when they were at that $4, that $5 last year. And so for us, that tactical allocation across that games. But even beyond that, if you come towards the end of the year and the allocation towards the PMs and the precious metals and that PGMs whole component, and then swiftly moving from that to even before this year the war began, we were quite well invested in the energy space because we could see what that meant and what the impact would be if the geopolitical dynamics that were being positioned in the PMs were to play out, then who would end up being the winners. So I would say this tactical allocation across the different investments that we made, it's what drives our return. So it's beyond what the market is doing, because at this point, it's not just about the benchmark or about what the industry is doing, but it's about the nuanced tactical plays within those allocations. And that's how we have managed to deliver these good returns. We managed to deliver them in 2025. That's why we've managed to deliver the same great returns, or we are delivering, and we hope we continue delivering the good returns we are doing for investors in 2026. Some of these funds that we did well in 2025, a multi-asset strategy fund, we already up about 26% plus for the year. It was not a lucky happenstance in 2025, but I would say our strategies continue to derive good returns for our clients. And ours is to continue working in financing these strategies. And through the tactical and the strategic allocation plays that our different teams optimize or maximize on, then we can continuously look at optimizing our client returns. So basically, that's how I look at in terms of our returns and how we believe we'll continue optimally delivering good returns to our clients.
So you've mentioned about sustainability and tactical allocation of various products, but the money equity fund is benchmarks to the NSE 25. And NSE 25 rose about 49.8%, but the money you gave us 40.23%. What explains the underperformance or versus the benchmark? And what does that say about the fund active share?
Nice question. And you have mentioned 40% underperformance. Yet you have been told, where did you get 40%? Is it real? So I'm happy that you have indeed said that 40% was real. And actually from your lessons, we actually underperformed. So that means that we should have done better than 40%. So one, to all our listeners, it's possible to deliver these returns because yes, the market does give these returns. And for us, as I said, is to optimize and ensure that whatever returns we optimally get from the market, then we can share the same and give the same to clients. But let me explain the money. The NSE 25 index in 2025 rose 49.8%. The money did 40.23%. One, as I was mentioning about, you look at NSE 25 and a market cap weighted index, and some of the largest returns of that derived from in NSE last year, or your East Africa portal segment and all these. There are a lot of drivers. Your parabolic movement in your energy space, that is your KPLC, your Kenyan, they had a boric move over that period or in 2025. But then when it comes to now, some of these, and that's what I was saying about a strategic capital allocation strategies we use, and even in terms of now the various weight we put across the different sectors, and also the limits that we put in terms of from liquidity limits that given there are certain liquidity levels of a certain counter, then we can only allocate this much or this percentage. And so it means that now a certain counter may move full 100%. We may not capture the whole 100% because for us, as we are doing the strategic allocation, we are not just looking at counter A has moved 100%. So I mean in 100%. But what if we want to exit that position? What if a client came and told us now, I actually want to liquidate 10% or 20% of my holdings, or I want to exit A, B, C, D. And we go into market and try to exit this counter A that moved 100%. So how much would we move the price if we try to exit position? And so it means that for us, the return is not the only driver that makes us allocate capital. There's a lot of other things that we look at, as I said, from liquidity perspective of each counter. We analyze its fundamentals, we analyze its technicals. And so at times, we are happy to capture a 20, 30, 40% move of a certain counter. But with just a 5% allocation into it, because you are comfortable with that 5% allocation, if we wanted to exit our position, we can do so without destabilizing the market. we know that given volatility, bandwidths of certain counters, that this counter moves 10% in a week, 15% down in another 1 week, it won't destabilize our returns. So we don't want to get to that volatile. So that volatility bandwidth is something else we also use. From liquidity, we have volatility. So that's another aspect within our strategic and tactical allocation strategies we use into. So you look at and do a lot of analysis of the volatility of each stock. So based on this means that now we are not allocated to every hyper growth stock you are seeing out there. And so we become quite choosy on where we allocate into. And for us, it's that optimization, that capital optimization or allocation strategy will factor in all these things. And then beyond that, so that one, there's that one aspect. But then even that being considered, the money, even having considered all those factors, volatility, fundamentals, liquidity, and optimally allocating to the best counters we believed would fit those strategies for us. The other thing that you realize that the money in itself, actually there are over 52% return for the year on a gross basis. But then we have the fees, we have our management fees, and then we also have a performance fee. A net of management fee, the returns were allowed for 50%, but then we have a performance fee, and performance fee is 20% of the net of the return after all these other fees. And after that, the performance fee, that's how the take home to clients was 40%. So indeed, I would say by and large, from a strategic point of view, the money, yes, did outperform a lot of other strategies. I would compare it with other strategies in the market in the similar space. We did have the different strategies, and yes, and also now having factored all those optimization scenarios that I've given.
That's well explained. I'm actually happy to hear that you don't just look at the returns only, because that is what most investors, especially retail investors, do look at. We tend to look at the high return of a product, but then we forget the fundamentals and the liquidity net of a product. I'm glad to hear that you also look at other things other than just chasing the return. Now that you've mentioned about fees, let's look at these fees. So with Almasi, you charge 1% annual management fee and a 0.5% initial fee. You also have a 20% performance fee above a hurdle rate of 5-year government bond yields. That's a 200 BPA. So from a CIO perspective, why is this performance fee appropriate for a Kenyan fixed income unit structure? And how is the hurdle crystallized? Is there also a watermark to protect investors from paying twice for the same performance?
Now, one, as we analyzed the market, one thing we wanted to do was, as a fund manager, get paid when our investors get paid, or do well when our investors are doing well. And so with that philosophy in mind, we sought to have lower management fee. It's basically administration fees, the infrastructure cost, things to ensure that the fund is running on a day-to-day basis, things to ensure that we are paying or we hire the best talent in the marketplace and you pay their salaries. So that's your administration fees or your management fees. But then the incentives that we need to outperform for the client. And once you outperform for the client, that means that now we make good for the firm itself. So that's how our performance fee comes into play. And look at the Almasi Fund, the 13.2 plus 2%, or the 5-year government bond yield as 2%. What is Almasi? I think the best thing is first to discuss what is Almasi and what it means to you as a client. That for you as an investor, you have the option of going to CBK and buying bonds and creating your own portfolio of bonds. Now, to us, what we are giving you in Almasi is, what is your goal? That I, as an investor, I'm looking to buy my piece of land in the next 2 years, the next 3 years. Then I'm looking in the next 4 years, 5 years to build this home. And what is my need or how much do I need to do for that? On average, whichever estate you choose in Nairobi, let me just choose whichever estate, I need to buy a piece of land for 2 million. And then I require about 6 or so million to build for myself a home. So if I say my next 5 years goal is to buy land and build a home, so I have identified my goal. Then how do I achieve this goal? What is my pathway to that goal? So the pathway to this goal is I want to consistently save. So I want a product that is helping me save. And since I have this goal, which it's not a volatile goal, I want a bit of almost some level of a good return, but something that will help me since I don't have a lump sum. I can continuously build on it. That's where actually your Almasi fixed income fund comes in. That with a minimum of 100,000, a minimum top up of 100,000, you can consistently save towards your goal. And assuming you are doing every month, let's say you're topping up 100,000, or you're saying that every month I'll be topping up 20,000, 30,000 through money market, accumulate for 3 months, then move it to Almasi, then continue growing it. Then after how many years will I achieve my goal of 2 million to buy my piece of land and 6 million to build my home? Then for us, once you identify your goal, then how do we create a product that suits your goal? So that's why Almasi came in. That on Almasi One, predominantly invest in government bonds, but just don't buy bonds and hold them. It actively trade these bonds on the Nairobi Securities Exchange. And so what we are doing is that on average, we are looking to optimize your return. That yes, you could have just gone and every month you're going to buy a boat on CBK. We're telling you, let's pick that hassle from you. We are the ones doing this for you, and we are actively every day participating in the Nairobi Securities Exchange. As of now, you have seen the statistics. We are trading almost 15 billion shillings plus of boards in the Nairobi Securities Exchange. For you, as a retail investor with your 100,000, you will not actively manage to participate in this and optimize. But through the collective investment schemes framework that has been created by CMA, so by you bringing your 100,000, the other person 100,000, the other person 100,000, you build this board fund that can actively buy and sell these boards in the NSE to ensure that above what you'll be getting from your return from just investing in government board, we are actually creating an alpha return on top of that. And so that's the basis of Almasi. It's there to help clients who have a medium to long-term investment strategy to invest and achieve their goals. And so out of this is basically now how even that fee structure came into being, that once we achieve for you a return above what you basically be getting from a 5-year government board plus, we are giving you that 2% as a ride-on above that. Then anything above that, then we share profits with you as an incentive to ensure that for us and even for our teams, they are always continuously maximizing, optimizing these for you as an investor. So basically, that's how our fees came into be, to ensure that one, we are aligning our goals and the firm goals with you. And this is the beauty about it. Every year, it's almost like seeking new, fresh mandate to optimize this for you. Why? Because a performance fee charged at the end of the year, and a once charge means that now the next, your investment compounds at that rate for the next year. And whatever you had achieved, you had invested 100,000, you got 20% return, which was net of all fees. So that means you had 120,000. And so next year, your money compounds. If you deliver the same 20%, means it's 20% on the 120. It's not on the 100 that you initially started with. It's on the 120. And so you are actually achieving also a compounding element on the same at an above market return. That's the beauty about your Almasi Fund, compounding for you at above market return. And that's how we actually help clients achieve this and their dreams and their goals that they have. And just to mention, as I come back to you, Rina, for our listeners, visit our website. There's a calculator page, calculators. You can simulate different goals you have. How long do you want to achieve them? How much do you want to invest? Or the periodicity you want to keep on topping up, and see how long it will take you to achieve some of these goals, and see how it can help you to actually lead towards you achieving the goal, the medium to long-term goal that you have with Almasi Calculator.
You mentioned a few things that I would like to take you back for as we move on to ACAS as well. Actually, I don't think there's a government bond that gave 20.5% net in 2025. And you talked about pulling the funds together for the Almasi client and giving them that kind of return. Also, you mentioned about compounding return, just the way people have understood how money market funds work, and you think that into the Almasi Fund, if I've understood that well. But then the flip side, where the fixed income, the Almasi Fund, has a lock-in period of 6 months. And some investors could be surprised by the lock-in period of 6 months, given how they're used to the money market funds, high liquidity. So how does this lock-in exist and how redemption windows work? Can you explain to us how that works after the lock-in period, and under what circumstances redemption could be delayed or gated or suspended because someone is locking in their money pocket? And you've also explained if you're moving on to the next financial period, it's advantageous because now you're earning on compounded. Your money compounds on the interest as well. So if someone is locking in money for this long, tell us what are the circumstances or redemptions could be delaying and the advantage of locking in the money or disadvantages the Almasi Fund?
Now, Almasi Fund as a fixed income fund vis-a-vis money market fund. We have a money market fund. Our money market fund, we look at it as a cash management tool. It's your day-to-day cash management product. You can easily invest in it, liquidate at any given time. And even for an amount below 30,000, you can do instant liquidation. So basically you go into the application, you have a mobile app, you go into your app, you click liquidate, set to my M-Pesa, and immediately the funds settle into your M-Pesa. It's a new feature that we've built on our money market fund to assist you in that quick cash management aspect. Even whether you're a business and you're looking for cash management, you are not using this money for the next few months. So money market fund is there for you for that cash management aspect. Then we actually made it better on cash on money market by helping you create wallets. On our app, we have wallets that you can say that I'm saving for this short-term goal of buying a phone. I'm going for holiday, paying for school fees in the next few months. So I'm saving towards this. And so you create a school fees wallet, a holiday wallet, a phone wallet. That's short-term goals that you have. That's your money market fund. Now, when it comes to Almasi, as I said, it's a medium to long-term goal. Now, money market has taken care of your short-term things. But then you have a long-term goal of, I want to buy a piece of land. I want to buy a car. I want to build. I want to build wealth. Building wealth is also a goal. That I have all these, I have cars, I have home, I have build, but now I just want to build wealth. So you see now, at that point, it's not a short-term goal. Building wealth is not short-term. Buying a car, building a home is not a short-term goal. And so how do we help you tune you that from your short-term goal to your long-term goal? So the 6 months lock-in period, it's, I would say, the first psychological barrier to you even as an investor. That move your mindset now from this short-term, but let's plan for the long-term. So that 6 months helps first move you from that short-term goal to not your medium to long-term goal. So that's why the 6 months lock-in period exists. When it comes to liquidation, after 6 months, you can liquidate your investment in Almasi and across all our special funds, whether it's our equity funds or whether it's our multi-asset strategy funds. After the first 6 months lock-in period, then you can liquidate part of your investment or all of your investment at any given point in time. And for us, we have a payment policy of T plus 2 days. Naturally, what we have been doing is that for clients who do their liquidation or their withdrawal request by 11 a.m., then we make a point to a very large extent paying the same day. And those that probably make their withdrawals after 11 a.m., so some will probably may receive the funds in the same day, but at the latest, the following day, you receive your funds. So even, I would say, on the benchmark we have set for ourselves, 98% of the time, we have actually outperformed that. And the other thing is, as we said, we are very keen on the assets and what we buy. How liquid is that investment? So that if there's need for us to liquidate to pay you as an investor, then you can easily do. When you speak about Almasi, as I said, on a day-to-day basis, we are trading almost 15 billion, or the market is trading around 15 billion worth of bonds on the Nairobi Securities Exchange. So that tells you it's quite a liquid market that when you came and you want to liquidate and we are holding these boards, we can easily go into market and without breaking a sweat, liquidate the boards and ensure you have made the payments to you. So all our funds are very liquid. We employ a very agile strategy, even in terms of ensuring we have liquidity management to ensure that we can meet all the redemptions of our clients at any point in time.
I think there's a lot to actually digest in there. And so guys, you can go to the website, look at the different funds under the money market. That is the cash flows fund and the money markets and Almasi as well. But I see time is running, so you cannot miss to talk about special funds, the global equity fund, and the Eurofix and the USD products. But first of all, let's look at the global equity fund. So the global equity special fund invests in major world names such as the Apple, the Amazon, Alphabet, Meta, and Alibaba. Explain to us the portfolio construction process of the global equity fund and the concentration limit. And what about the foreign exposure as well, and how the USD Kenya shillings movement affects returns for a Kenyan investor back here in the country and wants to invest into global equity fund. And maybe as you answer that, also you can go into the Eurofix and conduct the relation including the global special fund. So explain to us about the foreign policy of this fund and who bear the conversion spreads And are returns reported purely in USD terms or in any other term? And how should investors separate investment return from currency translation gain or loss? This tends to confuse many investors as well. So you can just talk to us about that as international global equity. And
It's a large question, so I'm going to break it into parts, and I'll take part one of just introducing it. I'll invite one of our analysts to also answer a bit, especially on the construction bit of it. And then I'll come back just to finalize on the Eurofix and such. So let me just introduce our USD funds and basically explain the aspect of the currency. Well, now our analyst comes and speaks about the construction process and differentiate between our global equities fund and our multi-asset strategy fund. From an introductory perspective, we have 4 USD funds. We have the Global Equities Special Fund. So this is a fund that invests in high value, high moat global businesses and a concentration of a few high moat global businesses. And our basic definition on this is a business that can withstand any economic times. For example, we have Amazon in our portfolio. Some people know it as the largest e-commerce platform. But when the digital age came and the age of cloud computing came, they're actually the largest cloud computing platform through AWS. As we enter to the age of AI, they have the largest what you call ASIC. We speak about NVIDIA, the chips they make and all that. So Amazon has created their own chips that drive their whole ecosystem. And actually, from a market value perspective, their chip business could be the third largest in the world if they were selling their chips to the outside world, their Trainium chips. Almost $50 billion plus of revenue from that itself. So that means even as you speak about the age of AI, the business has managed to reinvent itself. So it's not been disrupted or it won't be driven away by this AI thing. It's actually at the center of it. So this is a business that has created a moat in e-commerce, but then beyond that created moats in cloud computing, it's creating a moat in AI. And so any economic environment, whether it's high inflation environment, people will still be feeding, they still be getting their groceries. So they have one of the largest grocery chains across North America and Europe. Comes to pharmaceuticals, has one of the largest pharmaceuticals distribution lines. And so it means that whether it's within the economic growth segment, whether it's within the stability segments, whether it's when there's economic volatility, this business has managed to reinvent itself so that it's relevant across all economic dimensions. So these are the businesses that we seek to invest into, and we seek to help our investors own a part of through our Global Equity Special Fund. Our multi-asset strategy fund, as I said, is a thematic fund, and I know our analysts will speak more into that. So when it comes to you as an investor, on the application itself, as said, we have an app. Most of our investors here will deposit Kenya shillings. Then on the app, they get conversion rates. We pre-negotiate favorable conversion rates with banks. And so you'll find that now we have to save you. The friends who may prefer to go and I have my shillings, let me go negotiate my USD and come and deposit in USD. To a large extent, I would say we have better rates that we will get because of the volumes that we do. So you have better rates than you get by yourself. So invest your Kenya shillings. On the app conversion, you invest into the fund that you want in USD. And when you're receiving your reports, they're in USD. So on a reporting basis, there's no volatility risk. And when you're liquidating your investment, you can choose whether you want to be paid in USD, so you want to maintain the currency of the fund, or you want to be paid in Kenya shillings. And the same thing, we negotiate good preferential rates to ensure you're getting good conversion rates even when you want to convert back from USD to KES. So it means that on a day-to-day basis, there's no current risk. As an investor, you're bearing no currency risk because the fund itself is denominated in USD. That the only cost you paid, not a risk, is the cost you paid at entry level. And what you do is to reduce the cost for you as an investor. We negotiate preferential rates to ensure that you're getting most at the CBK average or near where the CBK averages are in terms of currency. Basically, that's how we help you optimize as you invest in our USD funds. So one of a kind in terms of investing. And so just to elaborate more in terms of even the market asset and the construction process across that, let me invite one of our analysts to just help answer that question. Jesse, you can introduce yourself.
Thanks a lot, Wilson, as I'm sure has cleared up a lot of the cloud around trying to understand our USD funds. So I'm JP, I'm just here today, and I work with the multi-asset strategy fund. And primarily what we do here at the multi-asset strategy fund we run a thematic investing strategy style. So I'm sure in the audience, you're wondering what a thematic invest strategy style is. So thematic investment strategy style is essentially a style that tries to capture economic or corporate shifts in the market. A good example of that would be what we saw in January this year. So in January this year, the big hyperscaler companies, your Googles, your Alphabets, your Metas, announced collectively over $600 billion in capital expenditure spending. So to the naked eye, that might just float over the stats, but to the trained eye, that signals a significant shift in markets. That essentially means that $600 billion stimulus flowing into the economy. So what a thematic investor looks at is who are the benefits, who are the losers in this space. So that is essentially how we make money in the multi-asset strategy fund. We look for that shift and we quickly position for that. So Wilson talked about the global equity fund that primarily looks for high moat businesses. These are businesses that endure economic shift, come rain, come sunshine, sleet, or snow. So when you compare that with a multi-asset strategy fund, this is a fund that tries to allocate and be nimble. It's your more nimble fund compared to your global equity fund. And that ties largely into your portfolio construction process. So, like he said, in the multi-asset strategy fund, we look to ensure that the bets we're taking are largely independent. So what does that mean? So you can find that in the US market, you find that a lot of the stocks and assets we invest in can be correlated. Since a lot of them are driven by the similar catalysts, you'll find that they're quite highly correlated, and that's usually not a good thing for your portfolio. So in the portfolio construction process, we assess assets based on their correlation, as well as that ties into the size and amounts we can weight these assets. So we basically ensure as an action, as our guiding principle, we want to ensure that we not only survive, but we thrive in all scenarios, not just the best case scenario. So a good example is during the war in Iran. Yeah, a very concentrated tech portfolio would have really blend in such times. But when you hold a diversified basket, let's say of energy names, your Exxons, for example, these are names that they won't give you your home run returns like your migrants, but in times of stress, they will build up a portfolio. So if the portfolio construction process tries to quantitatively distill this to ensure that we are within our risk limits, and essentially, like I said, we survive in all scenarios, not just the best case scenario. So that's just to tie into the portfolio construction process.
Thank you, Jesse. Has explained quite a great deal on our portfolio construction process. And probably now the last thing I would mention on that is the question you asked on the Eurofix fund. The Eurofix fund is a dollar-denominated fixed income fund or board fund. This fund invests in Eurobonds. And I know in Kenya, we have quite a great deal of market knowledge about the Eurobonds that have been issued and the near Eurobond crisis in 2024 and the fears that were there then and all that, the refinancing of the same and how that impacted the currencies and KES and all that in early 2024. And then the refinancing framework that the government has been doing on the Eurobonds. So now to you as an investor, assuming you have dollars or you earn in dollars and you want to be invested in a fixed income fund, we don't have a lot of corporate bonds or other debt, dollar-denominated debt in the market. And so the Eurobond is the largest. It's what generally most investors will go for. But the minimum investment in a Eurobond is $200,000. So how do you make it affordable for you? That's where Eurofix comes in. That with $1,000 will help you buy a piece of a Eurobond. Now what you do, instead of just helping you buy one piece of a Eurobond, will help you diversify across the different durations within the Eurobond spaces we have, or the Eurobonds that have been issued by the Kenyan government. However, it goes even beyond that. Because you don't want to concentrate your risk only on the Kenyan national risk, so you expand it further to sub-Saharan Africa Eurobonds. During this period, there was uncertainty of oil importing nations because of oil prices going up. But then there was jubilation by oil exporting countries because of how good the high oil prices were supporting their physical balance sheets. So you're Angola, you're Nigeria. So that means that by us buying Eurobonds in these countries, even when the prices of the Kenya Eurobonds, because it's an oil importing country, are going down, our portfolio is held up by the boards that were going up, the prices of the Euro boards of oil exporting countries, your Angola, your Nigeria, that were actually going up. So the Eurofix Fund helps you diversify to build the Kenyan risk, a sovereign risk, to actually other opportunities within the sub-Saharan Africa space. But then it even goes beyond that it helps you invest even across the corporate bond market that are issued across other jurisdictions from Europe to North America. That during this period, some of our best performing boards were energy or petroleum linked corporate boards, USD denominated, are listed mostly in New York. So we will help you invest in that. So Eurofix Fund is a basket of various sovereign dollar denominated boards, which you call Euro boards, across the sub-Saharan Africa. But we add a cherry on that to a few corporate boards in the global market space that are well highly rated. And with that, we help give you, I would say, above market return from what you would get by just having a USD deposit. So that's the aim of the Eurofix Fund. And Rina, I hope I've helped to explain it in a good way, and now you understand what Eurofix is.
You have actually explained extensively. And I believe seeing how time has actually moved when it comes to Eurofix and Global Liquidity Fund, if you put together what you just explained and what Jesse, your colleague, your financial analyst has explained, I believe we actually need to just have spaces or a forum where we're discussing these products that are options and how type of products work, how they are constructed. One strong worry as a retail investor, because I tend to believe or think most of investors would want or would wish to understand some of these terms and how to get into this kind of market. It could be a little bit more for me to understand. So I think we need just a space just for that. But then looking at the time, there's just one question that I would like to ask that I also get to be asked by many people, and many people tend to ask. So you want to invest into offshore markets, you want to invest into USD products and Euro bond products, but then you are earning your money in Kenya shillings. Would you advise someone to go for USD products, given that they are earning in Kenya shilling? And what are the pros and cons of doing that, and something that everyone should look at?
Great question. And I look at it, Madam Priyanka was here. Would have really enjoyed the question as she takes us through portfolio construction and what that means, because it's what on an everyday basis, our wealth advisors and our customer service teams and even our various independent financial advisors, that's what they do on a daily basis. I would say that's what we drive in portfolio construction. And by portfolio construction, what we do with you as an investor, as I said, our investments are goal-based. So what are you looking to achieve as an investor? And I'll just give probably a simple simulation of a portfolio. Just for discussion's sake, let's take an investor who has invested 1 million shillings or 10 million shillings. So let's look at the two investors. So we have investor one who came, have 1 million shillings. I've seen the shares in Nairobi Security Exchange are doing very well, and I would want to invest. How do I invest, or how do I go about it? So for us, the first thing you understand with this client is that they're looking to invest in the equities market. So understand why are they looking to invest in this equities market? Is it because of good return? But then what is their risk appetite? What is their actual towards risk? What are the other investments they have? Then with that, now we help them create a portfolio that, since the underlying theme or the underlying need for the client is to invest in the shares, we understand the market cycles within the share market. That at this point, NSE was doing very well January to mid-March. From mid-March to mid-June, it was doing quite poorly. We saw share prices come down. A lot of investors that had invested early in the year were a bit agitated on what was happening. So there's all those market cycles. They tell an investor now, diversify across different equity funds. Buy the Money Equities Fund, which is a local equities fund. Buy an Africa Equities Fund, which is dominated in South African Rand. Buy a Global Equities Fund, which is dominated in USD. And then we go into allocation. 40% local equities, let's say 20% Africa equities, and 40% global equities. So this is just an example of that client was just looking to invest in equity funds with their 1 million shillings. And so for us, what we'll do is that we find that now the return of these different funds are different. They differ, and there's different market cycles in different markets. But to you as an investor, what is to ensure is that at any particular point in time, your capital is actually working for you. Money is actually working for you. Even when there's a bit of lull or muted return in one market, let's say the local market, the global equities fund is pulling up the socks for you. When these other ones are taking a pause, profit taking, then probably the Africa equities fund is now doing that for you. And this portfolio, you have seen it outperform. Then how do we help you to practically do it? As I said, we have a mobile application, Arvocap. If you go to Play Store and App Store, you download Arvocap. We have over 33,000 clients, and I would say 99.98% of those 33,000 plus clients have all joined Arvocap through our application or our mobile app. These are people who have downloaded the app, invested, done the currency conversion, needing any of our interference or any human interference in there. So you have enabled you. They monitor their returns every day. You can monitor your return, you can monitor your investments through the mobile app itself. It's a very good tool that our clients have been using. So you see, at this particular point in time, the conversation is not just about, I want to move into dollars. It is about what was your goal. Then we help you build into it. Whether you want to get into multi-asset strategy funds, that you have said, we have helped you create a fund, various investments, and now you want to optimize. You want to get an alpha. You want to, get that cherry in your returns. You want to get into AI. You want to get into EV. You want to get into gold and silver, but you don't know how best to go about it. The multi-asset strategy fund is there to help you. So at this point, the conversation is not just about investing in, you're buying into dollars or you're going into this. It's about what is that goal. Then we help you match with it. And then in terms of making it easier for you on a currency perspective, that's why our mobile application is there to just make it easier for you when you're getting into the fund or getting out of the fund. So I would invite our investors to try out our multi-currency platform on our application. Once you download our application and you set up your account, and then you can see these features that basically help you. So it doesn't matter whether you're earning in USD or in KES. We have a lot of diaspora clients earning in these other currencies, in UFD, and they want to invest in the local board space. And so they said dollars, they do the conversion. So they said our dollars, the dollar settles into their dollar account. Then they do the conversion from dollars to KES, we invest in the money equities or in the Almasi through the application itself. And when they're exiting, they can choose either to convert back to dollars or to KES and such, or vice versa. Clients earning KES, looking to invest in the USD funds, all done on the mobile application.
Still so much I want to have asked you as the CIO, especially in terms of operations, fees, transparency, and more risk management. But because of time, I think we shall just arrange for another spaces for the same and tackle more about that. So just to wind up, tell us the advantages of setting goals and investing using your goal. And while at it, tell us where we can find Arvocap in terms of physical office, how can they download your app, and where can they find you in terms of their website, contact that you have in here as well before we wind up.
So thank you, Rina. Mine is first to thank all our listeners. And as you have said, this conversation, I'm feeling like I probably need to have a space to just speak about multi-asset and the thematic-based investment approach. I think that would be, if we delve deeper into that, the best performing USD fund, as I said, that 6% last year, 26 year to date this year. But just understanding what Jesse was even explaining in terms of process allocation and all that, I think it's something that investors would really love and probably will allege, especially one for the multi-asset. And so even for these other special funds, and it tries to understand risk and volatility and all those things, and but after the different market cycles, I think that would be a good one, and we'll be happy to have it. The advantages of goal setting as an investor, as I said, as we wake up every day, every investor has what they want to achieve in mind. They know what they want to achieve. They know the asset they want to buy. They know, but then at times the path to achieving that becomes a bit blurred. So how do I walk towards this destination or this destiny I've set for myself? And so for us, from an investment perspective, is to provide you with capital market solutions, licensed and regulated. All our products are licensed and regulated by CMA. To ensure we provide you with capital market solutions that will provide the pathway to achieving your goals. And the beauty about that is that with that goal, with that destination in mind, without destiny that you want to achieve, if we provide you with solutions that will help you match that. For example, one fund I have not spoken about is the GAO Fixed Income Distribution Fund. One fund that I love most. You have your parent back at home and you're saying that we want to set out a certain amount of money that we send to a parent every month. So probably as siblings, you have been every month, wetoa 1,000, wetoa 1,000, tufikishe 5,000 tutumie mzazi. At a point, kuna one sibling mwenye mambo haijakaa vizuri. So they're like, oh, give me 2 months, give me 3 months. But then at that point, you want, okay, as a family, how much do we set aside and appoint a beneficiary that every month this amount is sent to my parent back at home on the 9th of each month without fail. So whatever happens on the economic need of any of us, hii pesa itakuwa inaendea mzazi. Or I'm paying school fees and I've just been paid my contract. And one thing that really troubles me is that every quarter, every 3 months, I'm wondering where school fees itatoka. You're like, now, how much do I need to set aside to ensure that school fees, whatever happens, biashara wakati iko chini, contract haijalipwa, mambo haiendi nini, or even the good times, maybe school fees is taken care of, so I can think about something else. That's where GAO fixed income distribution fund comes in. It has monthly distribution, quarterly distribution, annual distribution. So what I'm saying is, what is your goal? Are you looking to accumulate towards a certain goal? Almasi Fixed Income Fund is there for you to help you move. I want to buy that piece of land that you need a few years. So Almasi Fund is there to help you on that. Are you looking to get income streams? GAO is there for you. Are you looking for short-term investments? I want to buy a phone. I want to do this and this. I want to go for a holiday. Money market is there for you. I want to set these dollars aside. Eurofix is there for you. Are you looking to get better returns? Are you looking for growth? You have a good foundation and you want to go for growth. And the equity funds are there for you. They're the money, the Africa Equity and the Global Equities Fund. Or are you looking to invest across the different global themes? At where conservation will keep on changing. No matter you are in gold, you are in silver, you are in AI, you are in all this and this. If you want to be participating in that, then the multi-asset strategy fund is there for you. Or you want ethical investing, the Sharia funds are there for you. So for us, we provide you that solution, that pathway towards your goal. And so I would invite everyone to visit our office. We're in our West Point building, Parker Road in Westlands. It's opposite Visao Shwal Primary School. So just opposite the gate to Visao Shwal Primary School. That's our West Point building is. We're on 5th floor. You can pay us a visit and sit down with our wealth advisor, our client service teams, or our IFAs, and they just discuss further about your goals. You can also interact with our online platforms. As I said, you can go to App Store, you can go to Play Store and download our app. It's called Arvocap. Download it on Play Store or App Store, set up your account, and start your investment process. It's quite easy, it's quite useful, it's quite, I would say, interactive to give you the tools to learn more about the funds and even to monitor your investments on a day-to-day basis. You can also give us a call on 0701 300 200. Give us a call and our customer service teams will guide you further on your investments. You can also write us an email at clients@arvocap.com and we'll guide you further. Or you can go to our website at arvocap.com, see our contacts, read more about our funds. There's a lot of material. See our month-to-month performance, how our funds have been doing month-to-month, so that as you're investing, you can see how. So we are quite transparent. We spoke about transparency. We are quite transparent. You'll see the month-to-month performance. Those months we had positive returns. Those we even had a negative return in a certain fund. And even as you're achieving the route, let me see the path to this 40%. How was it? How did we achieve 40% last year? Which month did they outperform? How are you doing this year on a month-to-month basis? So all that is on our website. So kindly visit our website and you learn more about each of these funds. And you will see our contacts there. And we welcome you to come and share more with us. So asanteni sana. And it's great interacting with everyone this evening.
Thank you so much, Wilson. You've given us so much insight that you need to digest. There's so much information that we need to understand when it comes to Arvocap products. That is like 10 funds. Those are a lot of funds. And I was also looking forward to talk about GAO distribution fund. It sounds interesting, especially when it comes to people who are mostly even in diaspora who wants to distribute funds in terms of school fees, their loved ones, upkeep money. So it's such an interesting product. And if you want to know more about GAO and other products, you can visit Arvocap website. Wilson have given us that. That is www.arvocap.com. You can write them an email at clients@arvocap.com. And they also give us a number. Reach out to them. You can talk to them and get to understand more or ask them more questions that you would want to. We'll arrange another spaces to cover the products that Jesse had talked about. That is Eurofix and offshore markets. That is all that we have for you tonight. Thank you so much, Wilson, for gracing our spaces today, and this as well, your colleague from us at Mango Capital. We look forward to having you again on our next episode. And that's all for tonight. Have a good night, everyone.